How to avoid LMI? Well, the only real way to be able to avoid LMI or lender's mortgage insurance here in Australia is to pay a 20% deposit plus purchasing costs. In this video, we're going to be talking about how to avoid lender's mortgage insurance. So let's start right at the very beginning. What exactly is lender's mortgage insurance? Well, it's an insurance that is a one-time payment, and it isn't to protect you, it's actually to protect the bank. It's to protect the bank if you actually don't make your mortgage repayments on time or you default and the bank has to repossess the property. It's an insurance that protects them that you are paying for. It's an insurance that you're going to pay if the loan exceeds 80% of the purchase price. So if you don't have a 20% deposit, then expect to actually be paying somewhere in the order of 1 to 2% as lender's mortgage insurance on top of your actual loan amount as well. So let's use some real figures. Let's say that you are upgrading your apartment and you're looking at a new apartment for $750,000. Let's assume you've almost got $170,000 saved. In fact, in my example, we're actually going to use $169,550 saved up. And I'm using a weird figure because I always like to assume people have a share portfolio that they're also going to be selling a little bit of to be able to boost their savings. But we can talk about that another day. In this example, if we're purchasing a $750,000 apartment and we've got $169,550 saved up, we're actually then looking to borrow $622,620, which is actually 84% of the value of the property. It's not that much higher than the 80%. And so you might be thinking, well, if it's not that much higher, surely the LMI can't be that expensive. Well, in this particular situation, the LMI would actually be $7,377. Now, keep in mind that with LMI, one of the things that is part of the way they determine the cost of LMI is based off a scaling risk profile. So the higher that figure goes, if that loan to value figure goes above 85%, then the amount that you're then paying in LMI changes again. It increases in the same way that if you get to 90% or 95%, it actually jumps up quite a lot from there again. So this is why if you can avoid LMI, it's really great. Bypassing LMI is also great because it means that you're also going to get better interest rates. Now, you might not realize it, but there's actually different interest rates that people get based off their situation. So if you don't have 20% deposit, you're going to end up paying a higher interest rate than somebody that does have a 20% deposit. And that then means that over time, you're paying more in interest than somebody that actually has a 20% deposit when they first purchase their property. So if you can focus on having the discipline to be able to build up that biggest savings buffer profitable, then it's going to serve you in the long run. I realize, yes, it is a big sacrifice up front, but you can do it. I've financially coached countless couples in being able to improve their finances and being able to build up their deposit so that they have more than the 20% deposit that they need to be able to purchase a home without having to pay lender's mortgage insurance. The reality is that it isn't a fast process. It usually takes about 2 years to be able to save a 20% deposit as long as you're focused. And one of the big things is really sitting down, going through your budget. So if you don't have a budget, I would strongly suggest that you click on the link below, grab our budget, learn how to actually pay attention to your finances and start putting money aside because that money does add up quite quickly, and having a 20% deposit will mean you'll get lower mortgage repayments every single month. So having a 20% deposit really means that yes, you can avoid paying LMI, and it's something that is worthwhile here in Australia. But again, it comes down to your personal finances. If you want more advice, get in touch with us. But as always, start with your budget. Click on the link below, grab our budget, and I'll see you in the next video.